Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look here at Snap. Yeah, Snap had a huge day today, closed up nearly 9%. Check out the options down here. Snap call options, some contracts up over 1,000%. So yeah, a huge move. As you can see here, this contract here started off at 3 cents today and closed at 33 cents. That's why people trade options. Huge moves if are on the right side of the trade. So yeah, let's take a look here at the Snap daily chart. Closed up nearly 9% today, and yeah, what you want to see here is RSI get above 50. If it gets back above 50, that'd be a big signal the chart's heating up. Fasto back above 80 is a good clue that the bulls are taking over. Now it needs to stay above 80. If it dropped back below, that would signal it's cooling down. You've got a PSAR bull flip over here. The green dots are back below the candle. That signals a possible start of a new uptrend here. It is on a 3-day run. The big level to hold is 690. That's this dotted purple line. That's the middle Bollinger Band. It's also the 20-day simple moving average. As long as that level holds, a new uptrend should begin. Check it out. You have to go off this chart to find the last close above this level. So this is a very bullish change in trend. As long as 690 holds, Snap will be in play for an upside move. Now, if it drops below 690, that would be a sell signal. As you can see on this chart, it's deadly to hold if it's forming candles below the middle Bollinger Band. It's deadly to hold long. If you were short during this drop, you were loving it. Now bulls are getting a turn. The next big level to break is going to be, you've got the upper Bollinger Band up here, and then you have this 750 resistance zone. It's really in the 740s, but it's going to be this high close resistance from the 15th is going to be the big level to get above. If you can get above that, then you have the upper Bollinger Band at 772, and then break above that on a really big run. You're looking for a push up there to that 50-day simple moving average at 855. Yeah, and yeah, so we'll look over here at the 15-minute chart for Snap. Actually, you know what? I used a 30-minute chart here because I wanted to go out a little bit further to find the next resistance levels. This is a 20-day 30-minute chart. I usually use a 15-minute chart, but as you can see here, the big resistance that it's hitting right now is from over here on the 16th, and so it has to break through the 725 to 730 resistance zone. If it can get above that, then you have on the 15th, you have this high close, and then also a high close from back here on the 8th and the 15th, and they're both up here close to, it's like 745 to 750, and that's lining up with the 400 simple moving average. And so basically the 745 to 750 level, if it can get past the 730 zone, that's going to be your big level to turn into support. If trading above 750 and that level does hold, that's when it could run up to that 50-day simple moving average and test the 8s. Okay, yeah. Oh yeah, and just to let you know, it is above the blue line. That is the 300 simple moving average, currently at 703. According to our strategy, if it were to drop back below that level, if it fails to hold $7, that would be a sell signal. It needs to hold that level in order to signal it wants to head higher. Okay, and as you know, we're focused on short-term trading. Okay, so yeah, this is FLWS here, 1-800-Flowers.com. Huge move today, closed up 31%. And so yeah, RSI is up here at 71. It has a hard time staying above 70 on RSI. So it's getting pretty frothy here. Have to stay above 70. If it drops below that, it's signal it's cooling down. Downside risk, you've got Fasto above 80. It also has a hard time staying above 80. So we'll have to see here if it can stay above that level for an extended period of time. Right now, it's hitting this gap level. It closed, there's a gap over here from back in August between low of day on the 22nd and high of day on the 23rd of August. And right now it closed above the bottom of the gap level. That's this green line here. It needs to turn that level into support. That's currently at 1360. The downside risk is if it drops below 1360, the candles could work back into the bands and it would drop all the way down here to where the 100, 200 day simple moving averages are converging. Basically, the downside risk is to drop down to this 1250 level to test that 100-day simple moving average. The candles could work back into the bands. Now the gap almost filled. The top of the gap is this red line here. You can see it's still unfilled. So what has to happen for FLWS to head higher is bust through the top of the gap, this red line, and then head up here to this high close resistance. You can see there was lots of consolidation in the sideways pattern here, and this red line was the high close from back here in August and July when it stalled out. And so basically it's just above 1460, and then a break above that 1460 resistance zone would put 15 on deck. 15 was the high from back in July. And so those are the upward targets if it can stay above the bottom of the gap. A drop below the bottom of the gap would signal consolidation. I did have the big volume spike today. Check out the huge volume behind the move. Okay, let's take a look here at ticker symbol EARS. It had a really nice day today. It was cruising along. Everything was looking great. It had this nice bounce after a big pullback. You could see, it was a good runner for us back here, and it started in September, heading into October, and then it had that nice multi-week run all the way up to that 200-day simple moving average of the red line where it stalled out. Notice how it formed the black candles above the upper Bollinger Band, and what happened? The candles worked back into the bands because it was at resistance. We see this pattern all the time. Notice how this was the top of the run. This was the climax event. Notice how it was accompanied by a giant volume spike on the 15th. The 15th was actually the high, and then the next day it had a higher close, but it didn't make it as high of a level. You can see the actual climax spike was on the 15th, and so that was the signal to lock in gains. And so people that follow our strategy of locking in gains on a black candle after a gap up open during a strong uptrend, locked them in near high of day, and then they saved themselves from the big pullback. Well, it pulled back and it had the big bounce today. And so I know a lot of people jumped back in here because the chart was set up. It closed above EMAs 4, 8, and 13, and it also closed above that middle Bollinger Band at 84. It needs to hold that level to head higher. And after hours trading, it's at 74. Unfortunately, they came out with bad news in after hours trading, and they came out with this saying that they're going to sell shares. You can see here they're having a secondary offering for $100 million, worth $100 million. You could see securities registration. It came out at 452. The bad news for penny stocks, it's always going to come out after hours or pre-market, and so when it does make it a risk to hold after a big gain at end of day. I mean, this was set up for a nice swing trade. It just sucks that they came out and trashed everyone that was jumping in today and threw everyone under the bus, because they could have easily have put this news out when it was up here or when it was dropping already. But yeah, they waited for the spike and then they put out the bad news. So I really feel bad for anyone that is now underwater on this trade. If you were loaded on the break above resistance, you were following the technicals. That's just the risk of trading penny stocks. If you want to avoid this type of thing happening in a penny stock and you have the capability to day trade, the safest thing to do is to end in cash. If you can end in cash each day, the next day you can jump back in. What would you have missed tomorrow? Possibly a gap up open. If you exited today in cash, tomorrow you could jump back in if it was pushing higher. Maybe you didn't get back in at 95 and you got in at $1, but you protected yourself from the potential bad news that came out after hours. It's just something to think about. I know a lot of people have to swing trade and have to hold, and so that is the unfortunate thing, is that if you don't have the capability of day trading, then you're unable to just freely buy and sell at will, and so that makes it tough against the new traders that are starting out with limited funds. So so now if you're stuck in this, you have to manage a bad trade if you had a higher entry point. And so what has to happen here? It has to get back above the middle Bollinger Band at 84. If it fails to get back above that level, it's going to signal downside risk. Right now at 74, that's putting it back below EMAs 4, 8, and 13. And so below 79 there, that signals downside risk. The risk is it's going to come back down here and it's going to test the 50 and 100 simple moving averages. It's going to drop down to 50. That would be another 25 cents off of the current share price. And so that is the downside risk. And so just keep in mind that your first loss is your best loss, and that if sometimes trades don't work out, and it's better to cut your losses quickly as opposed to letting them compound if you hold too long. Because if it comes down here and it breaks below the 50 and the 100, who knows how low it could go. Now they could run it. You never know. Tomorrow they could try to run this thing with the thing. Who knows how they're going to respond to this. But if it gaps down, it's below resistance. The downside risk is it's going down to the 50 and the 100 simple moving average. Now, if you take a look here at the 15-minute chart for EARS at 74, that's putting it down here at the 200 simple moving average. Notice how that was the big resistance level today, the red line. It kept hitting that level, and then it finally broke above at 2 o'clock, and that's when it really broke out higher. Well, the market makers took get right back down to that level. And so it's right back at the resistance from before. If it stays below that red line, below the 200 simple moving average, below 74 cents, then you have the 50 and 100 simple moving average at 71 and 70 on deck. And those are the bottom moving averages on this chart. So if it drops below 70, it's more than likely headed to the 50s. So just keep that in mind. All right. And yeah. So you have to, a part of trading is being able to manage a bad trade, or when when bad news comes out. That's what separates the rookies from the pros, is being able to manage a bad trade, or a trade that somehow you miscalculated, or bad news came out, like this with EARS. Okay, let's check out SLS here. Closed up 36% today. This was one of the big winners today. It's back above 50 on RSI. It's at 58. It needs to stay above that level. You want to see Fasto get above 50. You've got a crossover here on ADX. The last time the green line plus DI crossed above ADX, the black line, it dropped right back below. You don't want to see that happen again here. Now it could happen because this is a 3-day run and it has the giant volume spike. Check out the giant volume spike. Now look at the previous giant volume spikes. If you start back here with this black candle, you've got a giant volume spike, and then it drifted lower. And then you have a giant volume spike right here, another black candle, drifted lower. You have the volume spike, red candle, it did head higher after that one. You've got the volume spike here, and then it did drift lower. And then you had the first volume spike here, but that was on day one of a multi-day run. And then on the third day of the run, it was the giant volume spike right off of the same level, the 100-day simple moving average. And what happened? A multi-day pullback. And so this is the same setup as earlier in October. This is the same setup right now as this setup right here. You have the multiple green volume bars, white candles with the giant volume spike, and then you have the pullback right from the 100 simple moving average. Exactly what happened here. I mean, it's not identical, but you get what I'm saying. This is the same move. And so once again, it failed to break that level. Trading above the 100 simple moving average and then dropping back below intraday, that was the sell signal. That was your signal to lock in gains, to protect yourself from downside risk. It needed to stay above that level once it broke. So tomorrow, that's the big level. If it gets above 179 and the 100 simple moving average, then it should head to the top of this channel. There's ascending support here. You can see the red line, and that's going to lead it up here to around 250. That would be the next level. You can see that's the top of the gap. There's a gap over here. And the top of the gap is this red line. The gap filled back here on the 17th, and that's when it pulled back. Many times an upward gap fill will be a climax event, and after the gap fills, the stock pulls back. Well, now it has to get above the bottom of the gap. The bottom of the gap is this red line right here, and it's lined up with the 100 simple moving average. So if it can get above both of those levels, that'll signal it heads higher. It will head higher. If it fails to, then it's going to pull back. The downside risk is there's a small unfilled gap between yesterday and today. So it could come back down here, test that 50-day simple moving average again, possibly the bottom of the channel, and fill that gap. The unfilled gap was the red flag that it could possibly, may not be a sustainable run. So keep that in mind. Above 179, you're looking at a possible run up to the 250. Fail to break 179, and you're looking at a possible drop down to 126. Notice there was a PSAR bull flip, and then check out MACD down here. There was a bullish crossover on the 8, 13, and 5, which signals first, and then the 12, 26, and 9 is pinched. If it can cross over there, and then SLS can break resistance, it could push higher. It could break the previous trend, but you have to anticipate history repeating, and then keep an eye out for a change in trend, similar to Apple tonight. Yeah, if you caught the McClellan, he had the saying that Apple had repeated the same pattern over and over again, and that it was likely to do well and repeat that pattern, but that pattern broke, and so it was a change in trend. And so changes in trend do happen, but always anticipate history repeating first. And so here with this big climax spike, it could take a breather. Just keep that in mind. Break above 179, it's party time. The 225, 250s on deck. All right, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. As you can see here, we've got a lot of red on the screen here in futures trading, and you can see VIX is up. We are looking for a potential VIX bounce with the 3 gap downs in a row today. So yeah, if you'd like to learn more about that, please come check out the chat. I'll post the link below the video. Thank you.